Good evening, everyone. Welcome to Offices Adda 24/7. My name is Niharika Walia Bhatnagar, and I am with you with the area of accounting and financial management for bankers. Today, I'll be talking about a few MCQs from all the nook and corners of this particular subject. That means the question can be oddly from the era of module A to module C. I think we have got more questions from these two modules more today than other modules. So let's quickly move on and talk about the modules in a detailed format in the form of MCQs. Acha, have you seen what has actually come on our website or in our app? Currently, our Mahapack is becoming bigger, better, and it is becoming way better now. How is it getting way better? I hope you would have seen that particular event yet. But if you haven't, the Mahapack 2.0 is being launched, in which we'll be coming up in our Mahapacks only, which already included a few things. Number one, it included the current paid batches that you are going on with. If there's any other paid batch which is going on along with this particular batch, be it in English medium, be it the bilingual batch. Number two, when we talk about the area of this examination, then the second point that comes is, in terms of this examination, we are providing you revision classes. Then we are also covering the mock test. We are also providing e-books, and at the same time, this includes every single revision, MCQ, case study, numerical, whatever batch that are coming up under this Mahapack. You don't have to pay a single penny further once you have made the one-time payment for this Mahapack. But already we have given so much in terms of the Mahapack. What next are we coming up? The next point that comes up is we are coming up with the marathons and the mini marathons included in it. Along with that, we are coming up with the revision classes that would be held on every second and fourth Saturday, so that you can have a particular interactive session where we talk about the syllabus in detail. Right. So if you haven't checked out our website or app yet, then kindly go ahead and do it, as we are now available on Apple as well. So go ahead and check out the App Store in terms of Apple phones, and then you can now enjoy Adda 24/7 app on your Apple phones as well. Okay, now let's begin with the class today, everyone. First MCQ. This first MCQ is from the area of capital budgeting. When we talk about the capital budgeting, the term capital rationing means, what does it mean? There is that no retained earnings are available, that limited funds are available for investment, that no external funds can be raised, or that no fresh investment is required in current year. When we talk about the term capital rationing, capital rationing can be defined as allocation of funds. That means I will be allocating funds in more than one project. That means there are two or more projects which are fighting. For example, Project A said it needs 4 lakhs. Project B said it needs 3 lakhs. And Project C says it needs 2 lakhs. So if I have got hardly 8 lakhs now, I have not got the required amount. So how can I put my money into all these areas to get the maximum input, and at the same time, with this limited money, I can perform in a better way? So if you're looking forward and accepting that part, that I have only limited money and I have to put this money into different areas altogether and get maximum profits out of it too, then this would be the point of that limited funds are available for investments. Right? Now let's move on and talk about the next point. The next point says the combined leverage is calculated as. When we talk about the term combined leverage, it means that operating leverage plus financial leverage, operating leverage minus financial leverage, operating into financial, or operating divided by financial leverage. When we talk about this area, in terms of the correct answers, it would be operating leverage multiplied by financial leverage. So this is a question from the area of JAIIB. Added in terms of the JAIIB, this is a question from JAIIB level. Acha. Next pointer. Here comes the next question. The question says, which of the following is not true regarding capital budgeting? Capital budgeting is a technique where, see, if I want to buy a phone now, I'll look at the features, I look at the benefits, I can reap out of it. If I'm buying a costly phone, then obviously I'll be scared that I'm spending so much of money and I hope I can get some kind of benefit out of it. Now, that is what I'll be looking forward to. That is why I'll be making sure that I'm getting something out of it. Which of the following is not true about the reference of capital budgeting? Capital budgeting is related to the asset replacement decisions. Cost of capital is equal to minimum required return. Then existing investment in the project is not treated as sunk cost, or timing of cash flows is relevant. What do you mean by sunk cost? See, I was having a word with you and said that Anna, I don't know, where should I use my factory for exactly? I have this business in my mind, I have that business in my mind. I'm just not able to decide what to do with my money now, what to do with this particular factory. And some of you, one particular person came to me and said that, ma'am, are you considering the cost that you have already incurred on factory? Mecca, it's already dead. I have already paid for this factory for the next 1 year. The lease is already paid. Now in this 1 year, whatever I do with it, I will have to determine. And that is decision making. The thing that is already done is dead. It's sunk now. Titanic sunk. It basically sunk long back. So when it got sunk there, the point that it's sunk is over. What next is, what are we doing next out of it? That simply means once the cost is made, it's now past. And you have to look forward towards the next things and you have to make a decision regarding that further. So in this case, the correct answer would be existing investment is not treated as a sunk cost. Existing investment, the one which you've already done, is already a sunk cost. In terms of costing, it refers to the cost which has already been incurred and it relates to the past. Right? Next point. The interest on loan taken for the purchase of the fixed assets is a revenue expenditure, capital expenditure, deferred revenue, or capital loss. When we talk about interest on loan is, see, I wanted to purchase a fixed asset, and in order to buy that fixed asset, I am also going to incur some interest as well. So that interest, as well as there's an interest on it. Along with that, there is fixed assets. Now, I bought this fixed asset I took a loan, and then I also paid interest. By the time this fixed asset is being made, it's not made yet. For example, I'm making my place. Till the time this house is not prepared, now this interest will also be capitalized. Okay, that is the rule. This interest is also considered as a capital expenditure. Now, this is not revenue, this is not deferred revenue, this is not a capital loss. It is a capital expenditure because we got this loan exclusively for only one purpose, and that is for our business. Okay, na? It is a capital expenditure. Next point, the dual aspect concept results in the following accounting equation. Revenue is equal to expenses, capital plus profits is equal to assets expenses, capital plus liabilities is equal to assets, and capital minus drawings is equal to owner's equity. Though this particular concept is correct, but this is not the basic equation. The basic equation is, if I gain money into my business, so whatever money I put into my business is, which is called my assets, whatever I'm getting for the business, I can make it either with my own money or I can make it with the money that I've taken from others. Okay? Considering both of these, it becomes an asset altogether. Okay? This is the main point. The correct answer is capital plus liabilities is equal to assets. Okay? Chaliye, I think let's keep the class little crisp today. From Monday onwards, things are going to change. Just keep an eye. I'll be coming up with more questions, longer number of classes, and then we'll be dealing with it in a thorough manner too. Right? So if you're preparing for this particular examination, as I told you that we are becoming bigger and better in terms of our Maha packs, then this is the perfect opportunity. Please go ahead and check out our JAIIB and CIB Maha packs, where you can look forward to both JAIIB and CIB. This means that if you're preparing for it, number one, the 2.2 Maha pack is there, which would include marathon classes, which would include mini marathon classes, which will include practice paper as well as doubt sessions. So all those things would be included in it. But have you seen the last pack that has been added? This is Officers Adda Maha pack. This Maha pack means that in this Maha pack you will get JAIIB, you will get CIB, you will get bank promotions, and also for the certified courses as well. That means if you're preparing for any sort of things regarding banking there and you're looking forward towards growth, just take that last one and you are good to go. You don't have to spend even a single more penny. All you have to do is just buy this particular pack and you are thorough with your preparation, because everything would be there. What you need to do is you have to use the code MPAT and you will get it for 14,399.80. So if you're looking forward to this particular thing, then kindly go ahead and hurry up as the time is ticking away. After this, the packs are going to be costlier. So this is the perfect time to buy it, and this is where you can start your journey from JAIIB towards all the certified courses in one go and sit down, because this particular course is available for you in terms of 2 years. So you have 2 years and ample of time where all these things are opened up for you and you can prepare without a trouble there. So start preparing now. Thank you everyone. I'll be meeting you on Monday.